Jones. Oh, like a 10-year-old. Oh, how you guys doing? Hello, hello, hello. Hello. I hope you're doing fine. I hope you're doing just going. I wish you a Merry Christmas and a Happy New Year and a Happy Hanukkah and a Happy Kwanzaa and happy love to everybody in the world. Hope you're doing fine. I hope you're doing wonderful. Please like if you like, share, subscribe. Please do push the like button so I can upload more videos. This is a market brief and my summary. I am very bearish even if the market rallies. If the market rallies from here, I'm going to take a break for at least a month. I don't trust anything right now. And here is why. This is the equity put to call only. And you see the volatility with the equity put to call up, down, up, down. Last Thursday, we reached the highest ratio on record at 2.03, which is extremely bearish. And the last couple of weeks, we had extreme bearishness. A lot of puts were bought since November with high open interest and high premium. A lot of big boys bought a lot of insurance, which means they're extremely worried, and it does not go away like that. This type of bearishness does not mean capitulation because the Dow is still at high level. It means people are terrified. Big money is terrified. That's what it means. Don't listen to people that says this is or say this is a capitulation because we're not hitting a bottom. Okay? This is high premiums paid for insurance. And still 70.77 is not low, even though we went down almost 43% last Friday on very low volume everywhere. Good deal. So this is the equity put to call. The premium were the last 2 weeks were extremely high that were, priced for the puts. Okay, so this is the equity put to call. Let's look at the disco signal. Oh, Madonna mia. This is the highest 20-day moving average on records at almost 9.94. This is not a ratio. This is a moving average the last 20 days. And it's up sloping. This is not normal. So it's not, you smooth it by using this, although the equity put to call is up, down, as you can see, up, down, up, down. So you smooth that with a 20-day moving average. Oh my God, have mercy. See that? This is high. It shows the amount of fear in the market by the big boys. It is, don't believe anybody, people. Don't believe any bulls right now. People are terrified. So we must be careful. In addition to that, we still have that disco signal I was talking about. It's amazing. That signal is amazing. And it's up and it's still intact. No, still till now, we are extremely bearish in the put to call and extremely bearish because of the disco signal, which means whenever you have a bullish crossover between the 20 and 50, you have bad things happen in the market, and the success rate is amazing. You could do the same thing with this thing by using the 20-week moving average and the 50-week moving average, and it's still in a bad shape. Let's look at this bad boy right here. Okay, there is you. Here you are. See, and it always gives a perfect perfect thing. And the 20-week moving average is a high record as well. Unbelievable. Even higher than 2018, 2019. But I don't think it's higher than '08. Let's see. No, it's not. Okay, so good deal. So the disco signal is on in the daily and weekly, and bearishness is taking place now in the equity protocol. Good deal. Let's look at the UUP. The UUP, which is the ETF for the dollar bull. All right, and now we are in a breakout mode, and this pattern repeat itself over and over. We'll break out of this bullish wedge and still in breakout mode with the indicator. The indicators very bullish with the bona fide disco signal. You have a bullish MACD, you have a high reading in the stochastic, and you have a high reading in the RSI and a breakout. So it is not that bad for the UUP, which means it is more likely now we're going to go up than down because we're bullish right now. We could look at the 10-day moving average. It's flattened right now. And usually we did flats like that. And also the price action is closing over that. And also when it flats like that, most of the times you have a bull move. So bullish on the UUP, which is the dollar. All right. So let's talk about the Dow Industrial. So in the Dow Industrial, we are definitely breakdown mode. We broke down of this head and shoulder mini one right here, and we hit the almost a measure move, and we still under overhead resistance. We tested this pattern and we failed, and we went down, and we're trying to peak again, and now we are in overhead resistance. We are in the August 25th high, and also this patch of resistance of last May, June. Usually when you have support or resistance becomes support. If you break it, it becomes resistance again. So we definitely technically at seller zone. This is for the Dow Industrial. And this is the overall, now the bigger picture. We have a bearish pattern in the making right here, and needs more days. Maybe by next week or the next 2 weeks, this pattern will be complete, and most likely it is going to go down. So bearishness via head and shoulder, and also bearishness via seller zone, and we're still in breakdown mode for the Dow Industrial. Let's look at the S&P. The same thing with this. So you see this pattern everywhere in the S&P, IWM, Dow Industrial, everywhere. There's nothing bullish yet. As of now, nothing bullish for the stock market. Okay, this is another bearish move in the S&P, and you can see it right here. You go to the 20-day moving average, and you tag it, then you fail. Okay, and this happened 2 times already, and we still in this bearishness in the S&P. And if you see here, we broke down from this similar pattern in the Dow, and we tested it, and we failed so far. Okay, so again, similar thing that happened in the IWM, also in the S&P. Tag it, fail, tag it, fail, break down. So price action, breakdown and failure. Indicators, bearishness, RSI below 50. There's nothing at all, nothing. I mean, nothing bullish about this picture. except if you use speculative tools like Elliott Wave, and even in Elliott Wave, you would have different counts. So you really would be a brave heart to go long on the market right now with confidence. You'd be really a brave heart, maybe a gambler. Okay, good deal. So look at this thing. So as technicians, we believe that trend repeat itself all the time, and it's once it is established, it's hard. It takes a lot of energy to change the direction. So let's look at the price action. We have high equal high. Okay, it's almost equal high. Okay, you tagged it a little bit. So high, low, lower low, lower high, lower low. This is 101. This is now in a downtrend. If any technician says otherwise, I really want to compare notes with that technician. Even if you use Elliott Wave, please show me your counts because some people have different counts than yours. So it's definitely as far as the price action is concerned, it is definitely in downtrend with failure all over. So now we talk about moving averages. Moving averages also sometimes gives us an idea of trends. Sometimes you use price action or you use moving averages when you have bullish formation or bearish formation. What makes a bullish formation is 200 is the lowest. Then you have the 20, the 50, sorry, the 50, then the 20, then the 10, then the 5. Then you have a beautiful uptrend with bullish formation. On the other hand, the bearish formation is different. So the black line is the 10-day moving average. And this line right here, the cyan, whatever you want to call this color, is the 20-day moving average. And the red is the 50 and the green is the 200 now. So now you will have a bearish crossover 100% by next week between the 10 and the 50 because you will have that crossover. Then maybe next 6 trading days you would have a complete all out bearishness. Usually when you have that, the chances are extreme when everything is pointing down like that. The chances are extreme that you will have bearish formation where you have 200-day moving average followed by the 50, then 20, then 10. It's the opposite of bullishness. And when you have that, usually you have price destruction. That's what history tells us. So if you're really bullish, please let's compare notes because we really are not on the same page at all. So I talked about the bullish formation, the bearish formation in the moving averages for the S&P, and I talked about the price action, the failure of the 200. I talked about this pattern that's taking place everywhere. I talked about the downtrend is confirmed in the S&P, Dow, everything. The same thing with the IWM. You have the same pattern with the S&P, where you have this failure and price destruction, and you have the indicators indicating bearishness everywhere, and you have the same thing. You have head, left shoulder, right here, not right now. So you'd have the same thing, and you have a breakdown. You have a high, lower high, and low and lower low here on the 22nd. So definitely there is no doubt of this downtrend for the IWM as well. All right. So this is the Qs, which is the NASDAQ 100, the best 100 tech company. And definitely you have bearishness everywhere. Let's talk about the indicators. You have the stochastic below 20, which means the rally is going to be sold until this bad boy goes over 20 for the stochastic. That's how the market functions. So rallies will be sold. You have a low reading in the RSI, and you have bearish crossover in the MACD intact below 20, and also in the Japanese candles you have an on neckline bearish pattern, which means you have a white candle, but it was sold at the previous low or low of the previous price action, and you have this pattern right here. And it's a bearish pattern, which means continuation. So bearish on the Qs, bearish on IWM, bearish on the industrial, bearish on the S&P. Let's look at the transports. Same thing. What got my attention sometimes last November, that the Dow transport did not confirm the high in the Dow Industrial. Usually when this happens, the least is a correction. So we are going through a correction using this Dow theory, the idea of confirmation. The Dow transport did not confirm the November high for the Dow Industrial. And not only that, it failed to go over August high for the Dow transport, whereas it went over it for the Dow Industrial. So it's double a lack of confirmation, which has never been good at all. So so that's another thing. So look at here, the Dow made a higher high in December, November than this high, and it failed to confirm that twice. So it's a double whammy. So the least of our worries is a correction, and the correction usually takes 2 months. So I promise you, I'm not going to get in the market even if it rallies, at least until Feb. So this is my take on the market. I'm extremely bearish based on technical analysis, conventional technical analysis, based on sentiments via the put to call, based on different patterns all over, based on bullishness in the dollar and the breakout and the bullish wedge. Please like if you like, share, and do subscribe. And please do remember that disco is forever!